We better get back to the markets. You know, we do politics and money. Well, it's time for money to put it on the screen. Dow's down 250 now, and the Nasdaq is down 116. Mike Lee is back with us this morning. Now, I read your stuff, you know that. Why are you not buying into this recent rally?
Stuart, there's just too much. There's too many problems, too many things that need to be addressed. I think for starters, you look at earnings out next year. Earnings are expected to grow at 5%. I'd say that number needs to be corrected by as much as 20%. I think you could see as much as a 15% decline in year-over-year earnings as we come into that sort of corrective period and people have their come to Jesus moment with that these companies aren't going to make anywhere near as much money as the market expects them to make. It's going to be hard for stock prices to go higher. And then you add that to the Fed governors out there basically saying, look, the Fed's not cutting interest rates anytime soon, and in all likelihood will raise past when the market expects them to. So if you have higher interest rates for longer, and you have lower earnings, how are stocks going to break out to a new high? So like, this doesn't mean the stock market's going to correct 30 or 50%, maybe 5 or 10%, but it's just going to be hard for stocks to outperform and go much higher over the next 12 months.
You know, we really liked you when you were a Super Bowl. Okay, let me change subject for a second, because you're big on the housing market. And I think the real estate market at the moment is in real trouble. If it's in real trouble, does it pose a problem to markets outside the real estate industry?
Oh, absolutely, Stuart. There's a multiplier effect to the housing market. It's the first shoe to drop most times when you have a recession. And the housing market index started this year at about 85, and yesterday we had a reading of 33. This is a total collapse. And so, look, if you're a home builder, I really feel for you, because during COVID, the way that people wanted to live shifted on a dime. Then you wanted to build new houses, couldn't get any supplies. Now you can get the supplies. Mortgage rates are 6 or 7%, and people are starting to lose their jobs. So it's difficult to be a home builder in this environment, but that means less employment in that industry, less building, less of a multiplier effect in the entire economy.
You know what has always worried me? Stocks are down, certainly down from their highs in November of last year, and they stay down for a long time. Can you see that happening?
No. No, look, we're going to get through this. It's just a lot of these issues have to be addressed. I would personally like to see a sharp sell-off and the Fed pivot so we can get off to the races. We might not get that, but again, as we've been discussing, what we don't want is the Fed to cut too early and us be in a recession, a contracting economy where the Fed needs to get aggressive and tightening again. So I think it's a good idea for the Fed to overshoot now. Let's deal with all the problems as quick as possible. Let's rip this Band-Aid off so we can get to the next bull market.
Rip the Band-Aid off. I've heard that before. All right, Mike Lee, thank you very much, sir. I know we'll see you soon.
Thank you, Stuart.
Thanks a lot. Let's get back to the